Welcome back to the Daily Crypto Deep Dive. If you've been around the markets lately, you'll know that the noise has been deafening. Meme coins, ETFs, regulatory chatter, the Fed's latest hints about rates. But underneath all of it, one blockchain keeps quietly taking ground while everyone argues about Bitcoin dominance and Ethereum gas fees. Today we're asking a simple question with massive implications. Is Solana quietly becoming the infrastructure play of 2026? Before we dive in, make sure you're following the show and drop us a quick 5-star rating wherever you listen. It really helps the podcast reach more listeners who want something deeper than clickbait headlines. So, let's start with what makes this conversation matter right now. Back in 2022, Solana's reputation took a hit that most blockchains wouldn't survive. Outages, centralization claims, the FTX collapse. It looked like a death sentence. Fast forward to today, and that same network is processing more on-chain transactions than almost any other Layer 1 on the planet. The number of daily active addresses has surged beyond 12 million. Total value locked has grown more than 6-fold since 2023. And projects that once abandoned the ecosystem are quietly returning. So, what happened? To understand why analysts are suddenly calling Solana the Apple of blockchains, you have to go back to the rebuild. When Jump Trading's engineering arm, Firedancer, partnered with Solana Labs, they didn't just patch bugs, they rewrote the validator client from the ground up. The result is staggering. Simulated throughput above 1 million transactions per second and near-instant finality. If Ethereum is the decentralized equivalent of a supercomputer cluster, Solana is aiming to be the smartphone chip. Ultra-efficient, sleek, built for mass consumer use. That's not marketing spin, it's measurable. Last month, Visa confirmed it's expanding its Solana integration for settlement of stablecoin transactions, citing lower latency and cheaper costs than Ethereum's mainnet. Meanwhile, Stripe announced it would support Solana-based USDC payments for global merchants, reopening a door that closed years ago when network instability made integration impossible. For developers, the improvements are visible every day. The average transaction fee now sits at roughly 1/20th of a cent, and block times remain stable at 400 milliseconds. The network hasn't experienced a major outage in more than a year, a stat that even critics are starting to acknowledge. And perhaps the most symbolic milestone came when Solana Pay, the network's native payment rail, was integrated into Shopify, giving millions of stores an on-chain checkout option. It's the kind of quietly revolutionary step that doesn't make front-page headlines, but it builds foundations. So, what does all this mean heading into 2026? According to VanEck's latest report, Solana's market share of on-chain DEX volume has tripled in the past 6 months. They describe the ecosystem as Ethereum's only credible challenger for consumer apps. Galaxy Digital's research desk echoed that sentiment last week, noting that institutional interest in Solana is material, particularly around ETFs and structured products. That's where this conversation gets interesting. With the SEC now approving Ethereum ETFs and the market watching their flows, attention naturally turns to what comes next. And when analysts speculate on a third wave of crypto ETFs after Bitcoin and Ethereum, the same name keeps coming up: Solana. Bitwise CIO Matt Hougan told Bloomberg that if the SEC continues on its current trajectory, Solana is the logical next candidate. It has a clear use case, deep liquidity, institutional custody support, and, crucially, brand recognition among retail investors. If that approval ever arrived, even a fraction of the flows that entered the Ethereum ETFs could dramatically shift Solana's price dynamics. But we need to keep perspective. Solana's growth story isn't just about speculation, it's about infrastructure. When Anatoly Yakovenko, the network's founder, talks about Solana's mission, he doesn't use DeFi jargon. He talks about ubiquitous computing, a world where blockchains run quietly in the background of daily life, the way Wi-Fi does today. That vision is becoming tangible. Startups like Helios are building back-end APIs that let developers launch on-chain apps in minutes, while Helio is bridging the gap between crypto payments and traditional e-commerce systems. The Saga 2 smartphone, Solana's second-generation device, sold out its first batch in hours, fueled by a new wave of mobile dApps and airdrops targeted directly to wallet owners. The idea that your phone could be your wallet your ID, and your exchange all in one place is no longer science fiction. It's shipping to customers. And yet, the real story here is resilience. Remember late 2022 when Sol was trading under $10? Today it's more than 10 times that and climbing, with liquidity spanning every major exchange. When FTX collapsed and billions in liquidity evaporated, most analysts assumed Solana was finished. But grassroots developers kept building, hackathons kept filling up, and venture funds like Multicoin and Pantera continued to seed new projects on-chain. That determination is why 2024 was dubbed the Solana summer that never ended. Every month brought new protocols: Jupiter DEX aggregator, Tensor for NFT trading, Drift for perpetual futures. Each added liquidity, each brought users, and each helped cement the idea that Solana was no longer a speculative sidechain, but a main arena of crypto activity. Even Ethereum maxis are acknowledging it. Bankless host Ryan Sean Adams recently called Solana the most impressive non-EVM ecosystem we've ever seen, and that's from someone who built a career championing Ethereum. For investors, that matters because perception often moves faster than price. So, let's zoom out for a moment. In a market obsessed with short-term cycles, Solana's story is becoming a case study in long-term execution. It's no longer about whether it can survive, it's about whether it can dominate. And according to data from Messari, that's not a crazy question. In the first half of this year alone, Solana processed over 20 billion on-chain transactions, more than the combined totals of Ethereum, Avalanche, and Polygon. Its DEX volumes regularly top $2 billion a day. And for context, that's roughly half of Ethereum's daily DEX volume, with only a fraction of the market cap. It means capital efficiency. It means a network doing more with less. And here's where the conversation turns from performance to positioning. Because while everyone's watching charts, the smartest players are quietly securing territory inside the Solana ecosystem. Franklin Templeton added Sol to its digital asset portfolios earlier this year, describing it as an asset with operational momentum. VanEck's head of digital strategy called it the most scalable consumer-facing chain currently in existence. Those aren't anonymous Twitter voices. They're billion-dollar funds. On-chain behavior backs it up. According to Artemis data, daily active wallets on Solana's DeFi protocols have more than doubled since May, and NFT trading volumes jumped 140% quarter over quarter. You can feel the shift. Developers aren't apologizing for building on Solana anymore. They're bragging about it. Every hackathon has record turnout, and the next Breakpoint conference in Singapore has already sold out. So where does that leave ordinary investors? Without giving advice, the key takeaway is simple. Solana is no longer a speculative flyer. It's infrastructure. It's rails, bandwidth, throughput. And as with any infrastructure play, value tends to accrue slowly and then suddenly. Analysts at Galaxy project that if Solana keeps even half its current transaction growth rate, its fee-based revenue could exceed $2 billion annually by 2026. That would make it one of the most profitable Layer 1 ecosystems outside of Ethereum itself. Meanwhile, Solana's ecosystem continues to sprawl outward. Decentralized physical infrastructure projects, things like Helium Mobile and HiveMapper, are proving that the network isn't confined to finance. People are literally earning tokens for mapping roads or providing mobile coverage, and that data feeds real-world networks. This is where Solana's efficiency matters most. It's cheap enough and fast enough to power thousands of microtransactions every second without collapsing. That's what lets it escape the DeFi bubble and become something closer to an internet protocol for value. And then there's AI. Everyone's chasing the intersection of crypto and artificial intelligence right now, but Solana quietly holds one of the most promising positions. Projects like Render Network are migrating workloads to Solana for cost efficiency, while startups are experimenting with token-based compute marketplaces built on-chain. If even a fraction of that vision plays out, Solana could end up being the preferred execution layer for decentralized inference and model training. It's early, but the groundwork is visible. Critics still argue Solana's validator set is too concentrated. That's fair. Roughly 30% of stake remains with large operators. But the counter-trend is decentralization through tooling. Firedancer's open-source client will allow anyone to run a validator on commodity hardware, reducing reliance on big players. Once that goes live in 2025, expect the decentralization score to improve significantly, something ETF issuers will pay attention to. So what could derail it? Macro risk, obviously. If global liquidity dries up or US rates spike, risk assets across the board will suffer. But Solana's fundamentals mean that even in a downturn, usage persists. It's what happened in 2022 and 2023. Price crashed, activity barely slowed. That's resilience few chains can claim. There's also the human factor, Yakovenko's leadership style, the developer culture, the relentless shipping. The ecosystem doesn't wait for perfect, it iterates in public. And ironically, that's what helped Solana mature faster. Every outage forced better code. Every critic forced transparency. Now the same network that once paused is being used by Fortune 500 companies to settle stablecoin payments. That's a plot twist even Hollywood couldn't script. So, as we look toward 2026, the question isn't whether Solana will survive, it's what role it will play in the next internet cycle. If Ethereum remains the financial base layer, Solana might be the consumer layer, the app store for decentralized everything: payments, gaming, mobile wallets, AI, real-world assets, all running on rails so fast the average user never notices the blockchain beneath it. That's when crypto stops feeling like crypto and starts feeling like technology. And that's the bet here. Not just price appreciation, but ubiquity. The same way you don't think about TCP/IP when you open a browser, in a few years you may not think about Solana when you tap to pay, stream to earn, or log into a decentralized service. It'll just work. Analysts from Bernstein summed it up best in their latest digital assets note. Solana is doing to crypto what Apple did to computing, making it invisible, elegant, and inevitable. Whether that prediction proves true, one thing's certain: Solana's story isn't over. It's just entering the infrastructure phase, where the real wealth is built quietly, block by block. So wherever you are listening from today, keep your eyes on Solana. The headlines might chase the next shiny token, but the real builders, the real capital, and the real innovation seem to be converging right here. And as always, this isn't financial advice, just a reminder that sometimes the biggest opportunities come disguised as boring infrastructure. If you enjoyed this episode, make sure you're following the show and leave a 5-star rating. It helps us reach more listeners who want real crypto insight, not hype. And don't forget to secure your assets with a hardware wallet. Link in the description. Protect what you're building. We'll be back tomorrow with another deep dive into the stories shaping the future of crypto. Until then, stay safe, stay curious, and we'll see you at the top.